Hey, hi guys. I'm trading live again with you guys. And this video is for the prop firm challenge that I said I was going to share it with you guys on how to pass a prop firm challenge, the psychology behind it, and how you should be trading as an individual, right? So, it could be very easy at times, mostly if you respect your risk to reward ratio and you know what you're doing, and try not to be too greedy in this business. So on our last session, yesterday night coming market opening price, I was explaining something about market opening. When the market open, what does it do? Right? Now we had our vertical line here at market opening. We're saying that if this market opens and drop, we want to look for buy opportunities. But if it opens and buy instead, we want to look for sell opportunity. So why on the live, we had the market open with a gap. Okay. Now that open on a gap, where was the resistance found? The resistance was found on a 1 hour time frame. Okay. We had a nice 1 hour order block here. That is why I had this line over the zone. And I believe on the video, I had a horizontal line placed also at the zone. The reason why we're having this rejection at this zone. So I had a horizontal line placed there, but the market opened and gap through that horizontal line. Okay. But it didn't go below. It stayed above that horizontal line. And we saw the market pushing up, pushing to the upside. Okay. We saw the market pushing to the upside. Instead, it didn't drop below. It stayed to this up above this zone, right? Now, when we went to the 30-minute, what did we see? The market still gap again. Here. So we saw the market gap again here. Now, when the market gap here, the market came below, bounced off of the 1 hour order block. I explained why this is supposed to happen. You should go back and watch that video. I will not be giving everything for you guys on the platter. You need to put in the work yourself. So the market came back above and created what I called equal highs. What is equal highs? So this market created two equal highs here. And when market create equal high, what sits above those equal high? Stop losses, and also named as liquidity. Now, what did the market do? The market came here, grabbed that liquidity, and pretending it was about to sell. Now, at the same time, when it's grabbing this liquidity, what does it do here? It activates what they call sell stops. Okay, it activates the sell stop of orders that are above the zone. Now, as it activates those sell stop, what did it do? It reversed. It bounced off of the 30-minute order block, right? Come back again above, take out the highs of the most recent high. Go again right above. After taking out the sell stop, because once you activate the sell stop, it comes down below. Okay, it hasn't even hit the stop loss of those who are sell stop here. Their sell stop used to be around somewhere here. Now it comes again here, giving them hope that it's about to reach to the upside. No, excuse me. It activated instead the buy stops above the zone. Excuse me, my bad. It activated the buy stops. So the market didn't continue. It came back, it dropped below, it bounced off of the 30-minute order block, and it came back here to take out again the highs of the most recent high that it created, and giving the buyers hope that the market is about to keep buying, right? But now, what did the market do to take out the buyers before this bullish move? It sell to their stop losses, which is around here. Because if your buy stop is up here, if their buy stop is here, mostly all their books will ask them to put their stop loss on this low, which is this candlestick alone that got it out. So let me remove this. So this candlestick alone is what got them out of the market. Now, before you saw this nice expansion to the upside. Okay. But watch how this candlestick takes them out, but still respect that our 1 hour bullish order block that we had in mind coming market opening price. So that is the power of price action. Now, if you were at the same time activated buy stops at the same time, bringing more sell orders, right? Now look at what mostly happens. Why I usually come out of the market at break even, because the market will always give you an opportunity to understand you are wrong and you can get out, or you stay stubborn and stay in, then it knocks you the fuck out. Okay, so this is what always happens. Now once this market bought here, okay, and he bought again here at this zone, when you saw this nice week taking out the previous highs, taking out these equal highs, okay, intriguing sellers that this market is about to start selling. Okay, now once this market is selling like this, 1, 2, 3, 4 shift, and you see respected to the order block, what is it bringing? It's bringing more sellers in the market with the mindset of FOMO, scared of missing out, and that they are stocking their sales order. Now, where would their stop loss more likely to be? Here, right? So where is the stop loss more likely to be? Here, okay? Now, the market, what did the market do? The market had to reprice. So like I told you on my previous videos, before the market wants to buy, what does it do? Sells before it buys, because it needs to bring more liquidity. It needs to do the fake move. It needs to do what they call the Judas swing. Now, what happened is we had a nice Judas swing to the downside, taking out the stop of these people that are here, right? And boom, the market bought to the upside, heading to which liquidity? This. And which one again? Heading to which liquidity? This. And heading to which one? The previous highs over here. Now watch these. This is market opening price. Market has not gone below that zone. Okay. But imagine you bought this market at this zone where we bought this market, right? And you were risking 30 pips. Okay. You're up 65 pips. That is 1:2 risk to reward. You are out. Okay. Now I'm up 3% on my funded challenge account that I bought. $5,000 account. I want to show you guys that it's possible with any account. You just need to have your good risk management intact and you are good to go. So this is already a 1:2 risk to reward. Nice setup. You're done for the day. You don't want to trade every single goddamn fucking day. You want to secure that money. That is the goal, to secure the money. You don't want to take it and give it back to the market. Now, once you make that kind of percentage growth, what you do is you kick back and relax. You don't trade anymore, but you want to be on your charts and observing what price is doing. Why? To get yourself more educated and understand the reason why price has to move in a certain way. And also, I had to go down right to the 4-hour candlestick on our previous video to break down, to show you where market will gain its momentum before the bullish movement. So we had it here. We saw this nice swing to the upside, breaking this level. That is the 4-hour bullish order block. Okay, so we would expect if this market is to sell, it has to sell right to this point, filling this fair value gap and imbalance before any bullish movement. But unfortunately, the market sold, but it didn't reach right to this point. It instead reached to this high. It instead reached the previous, this week here. And we saw a nice rejection over there. Boom, to the upside, right? And after that, the next 4-hour candlestick break this other block that were triggering sellers to think that this market was going to sell at this zone and bought above. Okay. Now, what will be our next target on this tab here? So, right, this should be our next target, this specific point. Why? Because there's liquidity at this point that the market hasn't reached for over some time now. Okay, since the 23rd of March, the market hasn't reached to this point. And what do we have just above that? I'll leave you guys to guess. Do the math. I will not, like I said, I will not throw every single thing I give to you guys. You need to put in the work as well. So we have these also over here, which the market is more liable to reach. Okay. And we had our equal highs that I stated the last time, on our last Zoom call, that it was about to be taken out, which got nicely taken out. So guys, I'm not, like I used to tell you guys, like, once you understand this aspect and this way of trading, I'm telling you, there's no occupation that can literally pay you like Forex. The most difficult thing about this is getting the skill set and that patience for you to start implementing this to work. Okay, a lot of people don't have that patience. A lot of people don't have that endurance. A lot of people don't want, they just want instant gratification, which is okay. And it's not every single person that is going to make it through Forex. I'm not trying to be mean. I'm not trying to be rude, but that's just the facts about it. Because for you to get to that level of mastering yourself and getting the self-confidence that this will work, like, you need to have that inner dialogue with your own self and be your own greatest motivation. But if you're not even motivating your own self and you expect to have external factors motivating you, most especially people online, or maybe you're doing this because you want to impress your family, your relative, or your girlfriend or your wife, then that's already fucked up, because you won't be seeing this. You won't be seeing this with your clear eyes. You'll be seeing with a perspective, with a monetary perspective, right? Notice how I was talking about me being up these, but I never talked about the monetary value. I just said I'm up so and so percent on my funded account challenge, right? I didn't specify the monetary value. I didn't specify any amount that I'm doing. So I'm more focused on the percentage in return. Now, imagine you have a $500,000 or $100,000 funded account and you make 2% in a day. Okay, compound that 2% in a day in a month. That's crazy. Like, that's good money. Okay, I'm being realistic. I don't want to call numbers because numbers might scare some of you folks out. I'm just being honest and realistic. 2% per week is not bad money for me. For beginners, most especially trying to play safe. Not trying to go there harsh on your account and fuck it all up and, start eating your fingers and you go into depression or whatever it is, a psychological breakdown because of a mistake that you did. Now, play safe, pay yourself, and that's the goal. Okay. Now, I was explaining something very technical about the fact that the market always gives us the opportunity to come out shoot in case we are wrong. That's the reason why sometimes I will be on a sell or on a buy, but I can take myself out of that mistake, right? Now, for the people that were selling this market at this point, that were selling it here because they are retail traders, they have the retail mindset. The people that were selling this market, what would their stop losses be here, right? Or the people that were buying this market with their buy stop, what would their stop loss be? The most recent lows. Boom, it gets burst out here. Boom. After that, the people that were selling here, where would their stop loss be? Here. And it got burst out, boom, above the zone. Now watch what the market did technically. If you are a retail trader or if you still have the retail mentality, the easiest way for you to learn this real fast is when you are wrong, what the market does is once it hit the stop loss, once it breaks your stop loss zone, what it does is it comes back to where your stop loss was at, or slightly in profit to where your stop loss is at. Then you will see some amazing rejection there that this market is about to continue to the upside. Me, when I'm wrong, and I see that I'm wrong, I see the market doing this. If I had a sell position, I offload it automatically and I turn it to a buy at this specific point. This is a key video that will help you understand a lot in this business. And this is added to my educational reset program. I'll add this video there. So these actually is what I'm talking about. So if you are wrong here, what the market does is it gives you a second chance to get out. Because like I told you guys, the market sells to buy. Okay. Now, once the institution sells, they have two orders. They have their sell orders. Now, when they sell their sell orders are still in play. Once they are buying, their sell order is still in play. What do they need to do? They need to reprice the previous high where they had their entry sales, while repricing it to offload their sell orders for the market to go bullish. And this is what happens here. And once they offload it, that's when now you see the buying pressure comes back into the market. And boom, what is their first target? The most recent high. That's where liquidity is residing. The people that were selling here. Okay, now watch this area. Okay, the market came, see at that previous high. Now what we want to be looking, what we are set up, how we are set up from. Once you see this area, you don't just buy because it's buying. Okay, you kick back and relax. Once you go above and break the zone, once we have this nice confirmation of these candlesticks tipping back off of these 5-minute order blocks, that is your entry point. And this is your stop. This is where your stop is supposed to be as tight as this. You don't want to open your account with a lot of ridiculous risk. Okay. Your stop loss should be slightly below here, or approximately somewhere around here. Nothing more than that. So if your stop loss is around these areas, now where will your take profit be? Here. Now, if we do the math together, your entry price be here, your stop loss be here, 18 pip. Your target is 46 pip. Nice. 1:2, technically 1:3 risk to reward. Easy. Okay, you're out. So we see the market come back and reprice here. And ever after then, the market, boom. What do we have here? Imbalance. The market filled the imbalance accurately. We had some nice rejection here. See, we was still keep going below. But what did it do? Boom, it spiked up to this target. So you see the way I explain this in details. You see how I'm explaining these things in details to you guys. Okay. This is to reset your mindset from the retail mentality that you have, from the retail trader mindset that you have. Okay. That is why I'm calling my model the reset. Because the things that I'm going to make you see is going to be mind-blowing. And I'm going to be doing it live. Most of the time, it's not recorded, but live. So right now, I closed 2 positions on my challenge. And I have 2 positions on. So I close those 2 other lower positions. And I have 2 10-10 lot sizes open. Okay. So I'm observing what the market is about to do. I think I might just close one to be on the safe side. Okay. Okay, now this is where this shit really pisses me off when I want to close my orders and you see your account freeze, you be like, what the fuck is literally going on? Like, so yeah, like this is it, you know. Okay, I just closed one position as well. So literally I'm technically up 3% already with the closed trades. I'm up 3% already with the closed trade. And I have 1% profit again still up, which means if this percent goes to my target, our total profit will be 4% profit for a day, for a nice trading day. Now, the target of this account is to put it to 10% profit. I took one challenge. So if I pass that one phase, I get funded and we start trading and we start receiving payouts. Okay. So one challenge and we're already up. If we close this order, we'll be already up 4%, which means if we have a nice one trade again with a nice risk to reward like this, we are already up. We will be up 8% and one more trade. So 3 trades will make us pass this challenge without being greedy, with good risk management, of course, not trying to be ridiculously rich overnight, like some of your mentors gonna tell you, like, who gives a shit, right? You just want to make that fucking money. You don't give a shit about what I'm even talking. Are you even watching? Maybe you already left. But
yeah, I'm watching. Yeah, actually, the class is playing out as we spoke last night.
oh, I have somebody like, bro. What's up, bro?
No, I'm good. I kind of came late though, but at least I caught up with your teaching.
No problem. No problem about it.
Quite amazing how the price played out as we spoke last night.
Oh, thank you for your vote of confidence. I appreciate that, my brother. I appreciate that. So, at this point, want to be observatory, want to be watching what the market is more liable to do because, but like I said, I want to see the market reach this area and here. Now, notice how we are still at the early beginning of the week. The week just got started. And this line, this vertical line that I put here hasn't moved an inch from last night. It's still there. So that was the market opening price. Okay. Now this is still the one. This is the 1 hour time frame. Now the thing is, the way I'm gonna teach you guys is to make you understand that whatever happens on the 5 minute, it happens on the 1 minute, but more faster. Whatever happens on the 4 hours, it happened on a 1 hour time frame, but a little bit quicker than the 4 hours because 4 hours take more longer period for 4 hour candlesticks to form. So look at the technical perspective on the 1 hour time frame at the same key 1 hour order block over here. So if we're buying this trade based off of this zone, right? Look at the kind of market position that the market came at after these equal highs here from our previous video. We had this nice chase of buy stop above these previous highs, activating their buy stop. Now, what did the market do? And trigger more sellers to stock in their sell orders, thinking that if they don't sell, they will miss out. And the market sold, taking out the stop loss of both the sellers in this market at this point in time and the stop loss of those who had their buy stop, their buy stop activated here. Okay, watch how the new 1 hour candlestick just came up. Look at the fall of these bullish 1 hour candlestick to the peak. We had literally no week. So it's like the buyers are in control of this market. They are still in control. So look at how the market came back and repriced at still that order block. Why is taking out the buy stops of those who had their buy stops here, and taking out the sellers that were selling and their stop loss were around here. Look at how the market came back, repriced, took out those two individuals, those retail mindset before the market started moving above. And after that, like I was explaining on my last video, the market needs to sell before buying. And I explained why we had this support area here. So come on, guys, you just need to put in the work, okay? I will not do every single thing about it for you guys. But I understand most of the times it gets scary when you tell somebody, oh, sell that market when it's buying. It really gets confusing because not everybody understands that. I mean, honestly, when I'm trading, my chart is like this. I don't put all those things unless I want to educate. My chart is like empty as this. You don't have no harmonics counterparting stuff that you have to read your chart, or you don't have no indicators or whatever it is that they tell you that no, you need to see these line cross this line for more. No, fuck that, bro. That's the amazing thing about price action. That's the most amazing stuff about learning how the algorithm works and how the institutional order flow operates, and getting yourself out of the dumb money to the smart money. Because the dumb money is those who bring a lot of liquidity in this market. The dumb money is the newbies, those who don't know what they are doing in Forex. But the smart money are the 1%, that thing outside the box, that do the reverse. They reverse, not this, the reverse of what the dumb money is doing. And they do the reverse to what the dumb money is doing with a huge capital. Because the dumb money is more, like, honestly speaking, we have more dumb money in this market than smart money. That's why this Forex market will last as long as possible, because dumb money will always outcome smart money. And dumb money are the people bringing liquidity more in this market. So dumb money will always exist.
That's true.
Dumb money will always exist to keep the business going. Now, you don't want to align yourself with dumb money. You want to align yourself with smart money. It doesn't mean we'll have the capital like the smart money do. Smart money trade billions and trillions of dollars on one contract. We don't have. And imagine you don't have that kind of liquidity, but you want to go against smart money. Isn't that crazy? But instead, what you need to do is, you don't have that liquidity, but it doesn't mean you can't align yourself with smart money and try to make money while smart money is making money. So that is the thing that I really want to put into you guys' brain, and get off social media, put in the time and the work. Don't get fooled around by some jerk online telling you, oh, to flip $500 account to $10,000 account. I'm not saying it's impossible. Don't get me wrong. I'm not saying it's impossible, but you will not do that at your beginning stages. They never told you how many times they blew up that account. They just recorded just the end result of a successful flippage. and they came and show you. Don't pay attention to that. Be your greatest competition and be your greatest competition. That's just it. So long as you can make an exponential growth from who you were yesterday to who you are today, you're progressing. You might not think that you are progressing, but you are progressing slowly but surely. Okay? Don't get fooled around by people driving Lamborghinis online. Your time is going to come. Just put in the work. Sacrifice every single thing now and put in the work. You might not see it now, you might not see it tomorrow, it might not happen in a month or two, but just stay consistently grinding. Don't go off the chart thinking that, oh, I'm trading for 2 months, but you've not watched the chart for even up to 3 days. Like, what the fuck are you doing, bro? Like, who are you fooling? You're fooling yourself, and your progress and your road to success becomes even more longer. You see, the funniest thing about this business is you can never cheat the game. If you think you're cheating the game, you're cheating your own self and you're cheating your own progress. That's just it. And there is nobody that becomes more successful in trading than the other person without experience. So the advantages of people that come into the business early enough and put in the work earlier enough, they will definitely get results more than those people that come behind them. But if you come, you sit your lazy ass down on your couch and watching your fucking TV or your YouTube video every single goddamn time instead of putting the chart times and working. Even if you care, you stay 10 years in this business, if a little kid comes in and put 2 years of intense mentorship program, they will whip your ass that you've been into this market for as long as you thought you were. But you've been there years, but when you put it in the work, where you put it in the work ethics, the chart time to see that what you're actually observing or the way you want to see price operate and all that movement, you were not doing that. You were not. So stop fooling your own self, okay? We're just being honest. We're just being realistic. We're not trying to hurt anybody's feeling, but we genuinely don't give a fuck because, you know, we tell what it is, okay? We want real traders. We don't want demo ballers over here. But we want real people. We want people that are willing to accept facts, not fictions. Okay, because
Yes,
there's a lot of companies out there that sell dreams to my African brothers. God damn, my brother. When you see those people living their life on Instagram, you feel like, bro, your life is fucking behind. Like, what the fuck am I doing with my life? And you just want to sign up because the things that you see online is what you believe trading is going to give you instantaneously. Now, where you get really hurt is when you sign up. And those people don't even give a fuck about you because they have like thousands of people that they get signed up every single day. Do you think that they'll pay attention to your dumbass? Do you think they'll leave those thousands of people and come and concentrate on you, fucking individual, to make you guys grow? Like, let's be honest with ourselves. And don't just take my words for it. You can go and sign up and see it for yourself, and you can come back and thank me later. Don't just take my words for it. Go sign up. You understand how they respectfully don't give a fuck about you as an individual. It's not like they can, but that time distribution to attribute a specific time to a specific student, I myself, I cannot do it. Like, I'm not hating on them. I'm not condemning their business. I'm just being, I myself, I can't do that when I want to attend a certain level of visibility. I have like 10,000 or 1,000 students on my live trading session, or even 100 students on my live trading session. It will be exhausting to go one-on-one and explaining every single thing to each student. And it's draining. And I believe they have their own life to live. And most especially once you start making money in this business, you will have your life to live. You will not be there trying to, you'll be doing your part, like, educating them, giving the nuggets, doing the recording videos if you have the time, because not all Forex traders are also educators. So keep that in mind. So there are some people that know how to trade, but they don't just have that patience or that time to be teaching people. They just be like, fuck it, man. I put so much time into learning this skill set. Why the fuck would I spend more time educating people when this is my time to live my life? So not all successful traders are educating. And I also respect that everybody have their point of view. But what I'm always telling you guys is, please try as much as you can to be realistic for the people that you are subscribing to. Okay, I'm not, excuse me, I'm not saying I have the best strategy. I'm not calling you to come and subscribe to me. I don't give a fuck about your subscription money and all that. Okay, but I'm advising you to go for what you see. No, excuse me, to go for what is more practical, not what you see, because what you see at times can be very deceiving.
Yeah.
Once you're on my Telegram channel, I take my losses. I'm transparent. I show you guys. Okay, every single thing I show you.
That's
Transparency is every single thing that I do with most of you guys out here. But a lot of people will not reach that because they have their credibility and they have some courses that they need to sell. They won't put that on the line because they know if they show you some certain kind of information, they'll be like, oh, you scare you off and you will not subscribe to their channel or to their mentorship program, and you know they get out of business. But I don't, bro, like, respectfully, it's not like I say I hate them, but I don't give a fuck about that. I'm trying to build a strong mindset of individuals that will understand that losing is part of the game, but not speculating. Losing is part of the game, but knowing what you're doing will make you understand that losing is part of the game. But on a consistent winning rate, those losses are off the business. We had a trade on Friday, we didn't take a loss. We had a trade on Thursday, we didn't take a loss. We had a trade this Sunday market opening, Monday market opening, we didn't take a loss. That is 3 successful trades. Even if one trade is 1:3 risk to reward, which means we are 1, 2, 3. We are 9 times in profit. So even if you take one hit, one loss here, let's say we're reaching 50 pips, okay? You make 150 pips on each movement. That is how much? 150, 150. You're already up 300 pips plus 150, you're up 450 pips. Even if you took this trade, you risk again what? 50 pips, you lose 50 pips, bro. What is 50 pip loss on 400 pips that you've had for the past 3 days? Even if you take the next trade, you lose like 3 successful trade. What is 150 pip on the 450 pip profit that you made? And with what I'm teaching you guys, it will be very difficult for you to have three successful losing trades. Now, when you compound all those things, do you think you even focus your mind on your losing trades? I'll leave you guys to be the judge. So this is 11 a.m. in the morning, and our live session is almost coming to an end. I want to look at our economic calendar to see what we have Monday. Monday we have GBP, New Great British Pound news. The government bill is fixed at 1 p.m. That might affect the London pairs a lot. We have a red folder. We literally don't have USD GPY news, which means, like I said, gives us also already a red flag that we should be out of this market. Like, we don't have any major market move on USD pairs because they will have no news on our economic calendar. But still, we made some nice profit off of Sunday common market opening price. Now, I understand that you don't understand how I took this sell here, because be like, fuck it. If I was in this market, I would be selling this market at this point. When this market reaches area, I'll be selling it. Why? Because of this order block, or because of this, I don't know. But I'm not saying that order block are not valid, but for your order blocks to be valid, you need to align yourself with liquidity, price action, the algorithm, and fair value gap and imbalances in the market. That's when an order block becomes valid. Because watch how this order block here is not valid. And some of you will say, oh, these people are teaching order blocks and mitigation block, but it's not working. Maybe because the person that is teaching you is teaching you really bad. So this is not valid because of the fact of there is liquidity here and here and here, and also here. That's why it's not valid. But now, which other block is instead valid? This. What made this valid and what made that not valid? Dun, 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 dun. Dun, 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 dun. Dun, dun. Liquidity, liquidity. Yeah, you guys did right. Liquidity. The market had to reach there, and the market knew that you have a retail mindset. So once it's reaching to these people's liquidity, your stop loss will be here or will be here. And as this market is selling here, it gives you the hope and the expectation that, oh, it's going to keep selling. And watch out for those people that trade full margin. When they see the rejection at this point, they'll be like, okay, the market is about to sell back. And once the market make this slight movement, be like, boom, above, and it loads the account. Oh, man. Yeah, I'm telling you, I blew several accounts. On my early days of trading, like, I blew several accounts because, bro, like, I was so dumb into this shit. And I came from those MLMs, came blah, 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 bullshit online. I was part of IMO at the early age, too. You know, if any of you guys know the company called IMO, one of the biggest marketing company in the world when it comes to Forex. Yeah, I was one of the first people that brought them to Cameroon back then in 2019. I have the videos on my Instagram. You can go and watch it there on oktgenesis.pi. And so I saw every single thing literally happen in front of my eyes. So we are less than a minute. So with that being said, folks, I'm happy for you. Anybody that attend and watch this video, because I will not